See how these two harami emerged at a resistance area? And this is what the harami will look like with the Forex markets. It's going to be a black real body that's right near the top of the prior real body. In fact, if the black real body got bigger in the harami, and more than halfway into the white candle, what would it become? A dark cloud cover. Deeper, wraps around the white candle, bearish engulfing pattern. Right. So it's the degree to which the black candle gets into the white candle that we could make it more important. So a bearish engulfing pattern to me would be a little bit more important resistance than a dark cloud cover, and I don't even use the harami as a resistance area. Why do you think the market stalled with the harami? What pattern did we have on this chart before the first harami? See, bearish engulfing pattern, black wrapping around the white. Even if you didn't have that, was it a resistance area anyway? Yes. Yeah. This is not a harami. Why? White. And what else? Where's that real body in relation to the other real body? All right. It's above it. It has to be within it. Okay, here's another harami, confirming some engulfing patterns. Okay, here's a bull harami. And even if the second real body is a doji instead of a small real body, it's still a harami. Okay, here's another harami. We saw this before with the hammer. Remember somebody had asked the question about those small real bodies before the hammer? Okay, here we have a bearish harami and a bullish harami. I think those are two strong words. If you have bearish harami, you think the market's going to go from up to down. But just think of it really as the market, the bulls are losing their breath. And the bullish harami, the bears are losing their breath. Now we've looked at single candlestick lines, the hammer, the shooting star, the high wave candle. We've looked at double candlestick lines, the harami, the dark cloud cover, the piercing pattern. Now we're going to segue into the triple candlestick lines, where we have three candle lines, and one of these patterns is the morning star. Markets moving south, long black real body, bears are in control or in command of the market. Then small real body, black or white. This is non-Forex, black or white. The market is still, to me, is still negative because it's still it's holding the lows, but the small real body lessens the downtrend. I would have the short-term trend down a little bit more to neutral, but mainly down. The real turning signal comes in that white candle. Remember, we're looking at the psychology of the market. The bulls have now taken control of the market. We want to get deeply into the black real body, the first black real body. Okay. Forex. Okay, this is non-Forex. You see how the real bodies don't have to be touching. In fact, this is ideal. If the real bodies don't touch, it's classic. With the Forex, you can't have that. Why? Because the opening and closing are going to be the same. So, with the Forex market, market's moving down. The close is here. The open will be here. So this is going to have to be a black real body or a doji. Okay. I said most of the time black or white because it can also be, even if we have a little bit of a white candle like this, that's fine. But most of the time it's going to be a black real body or a doji. The main thing, this would also be obviously a harami, right? If this was a white candle. And then a white real body that gets deeply into the black candle. Now, notice how the black real body, where the black real body closes and the white real body opens, it's going to be the same. So what are beside a morning star, what are the last two candlestick lines forming? Bullish engulfing pattern, exactly. The main thing is, though, for morning star, in addition to also being a bullish engulfing pattern, it has to close above the middle of the black real body. this is what the morning star is going to look like in the Forex market. Okay. So here, there's a morning star. And why is there support there at that morning star? Where's that dotted red line come from? Previous support formed by what? A bullish engulfing pattern, yeah. Right. And you can see that that's a bullish engulfing pattern. That would not, if the black real body of that bullish engulfing pattern was small, okay, would that then be that 3 candlestick lines be a morning star? Did the white candle get deeply into the black candle enough? Okay. Okay. So I'm talking about over here. So let's imagine this is a small real body. Remember, you need a small real body to be a morning star. So let's imagine there's a small real body like this. Right. Then this white candle really has to get more deeply into the black candle to be a morning star. Yes?
The morning star, lower shadow doesn't matter?
No. The question is, in the morning star, does the shadows matter? No. Nope. And you could use the I'm sorry, what's that? You could use the lowest shadow of those 3 candlestick lines as your support level. That's true with pretty much all the candlestick signals. If 3 candlestick signals make up the pattern, you use the highest or the lowest of those 3 candlestick signals. So the morning star is a 3 candlestick signal. You take the lowest low. The bullish engulfing pattern is a double candlestick signal. You take the lowest low of those 2 candlestick lines, the shadows, and that becomes your support level. Okay, here we have the evening star, non-4x, white candle, real body, black or white, that doesn't touch the white, ideally it doesn't touch the white real body, and then a black candle that gets deeply into the white candle. Now, many of the candlestick signals, I talked about, be careful about some of the stuff you read about candlesticks. It's just not true. Like, I've seen ads, candlesticks, been around 300 or 400 years. That's not true. The candlesticks, as far as my research is concerned, really started when the equity market began trading in Japan in the 1870s. Before then, the Japanese really used the psychology of the market. And what they've done is, a lot of it is clouded in mystery. There's no definite answers. But from my research, what I've seen the Japanese have done to evolve the candles is they've taken their understanding of psychology and shifted into a candlestick pattern that reflects the psychological aspect of the market. So, for example, I had a book translated that was written in the mid-1700s, a Japanese book, and they talked about, in candlesticks actually, in Japanese, yang is they call it a yang candle and a yin candle. Yang is a bullish candle, yin is a bearish candle. And in the literature, this was pre-candles, this was in the 1700s, it says when yang reaches an extreme, there is stillness. This stillness gives rise to yin. That's the bearish engulfing pattern. White candle, when yang reaches an extreme, gives rise to stillness, the spinning top, and that stillness can give rise to yin. That's that black candle. So this is a non-4x.